It's nice having you here. I want to welcome you today as we are going to dive into some key risks to the economy, and especially surrounding the Israeli and Hamas war. Then we're going to update your portfolio for the months to come, and we're going to be discussing Medicare for the year to come as well. And then finally we'll wrap up with our second opinion service. So let's dive in to the very first element, economic and stock market risks. First, let me address a matter that's close to our hearts, the ongoing Israel and Hamas conflict. Now, our thoughts and prayers are with all of those who are affected, and we hope for a swift end to the suffering and the loss of life. Now, war is indeed a terrible ordeal, and it ripples, and the effects are really extending beyond just the region that's directly involved. The human suffering is beyond words right now, and our hearts go out to all of those who are enduring this tragedy. Now, taking a different note here from a financial perspective, events like these are always bringing out a heightened sense of uncertainty. And the stock market, which is really sensitive to the geopolitical events, really can face another unknown. Really, what we're talking about here is that investors may be concerned about the impact of such a conflict on the global markets. So that is something that we are really looking to monitor, and is a critical factor to consider for potential just changes to come, especially when it comes to with different assets that are tied to inflation. So here's the thing here. When there is turmoil in regions such as the Middle East, these economic significant areas can really lead to supply disruptions with oil and energy. Well, this can really in turn then put upward pressure on prices. So this is not something that we're seeing yet. In fact, we're actually seeing a little bit of the opposite happening in the more recent days. It started with a 4% spike in oil, but has since started to come down just slightly. But it is something that we are closely monitoring. So this shift, like I said, that's really starting to occur with geopolitics, with inflation. That's something that we are closely monitoring. But inflation specifically is an issue that is really making a lot more headlines lately, especially because last Thursday we had the CPI report, and this report shows that inflation is far from over. Now the prices, the consumer price index is what that is. It's really rising on various goods and services, from food to, yes, housing and energy. So we really want to be focused on that as well, but also let's finalize our time here talking about the Federal Reserve, the institution responsible for managing the interest rates and ensuring that our economy is stable. Now they're facing a challenging dilemma right now. If they lower the federal interest rate to basically too soon, there's a risk of causing inflation to skyrocket even quicker from here. So this would be detrimental to really everyone and our purchasing power that's out there. So that's basically on the one side here. On the other side, if they keep the interest rates high to tame inflation, then they run the risk of hurting the broader economy even more. So higher interest rates can really slow down our economic growth, not only on a government front, but also on just a local front as we know it. And it makes it more expensive for businesses to borrow and invest. And it makes it more expensive for you to borrow and invest. So this is really an alarming thing that is starting to happen. But here's one more alarming aspect. We are really trying to spend our way out of a recession that hasn't even started yet. And we've added a staggering $600 billion to our deficit just in the past 30 days alone. Now, to put that into some perspective here, this would be an annualized amount, approximately $7.2 trillion in a deficit. So we are actually doing this and trying to finance our government more and more with some deficit spending. And the US Treasury is issuing bonds to pay for all of this, which can have a significant impact on the bond market right now. So with such a large supply of bonds, entering the markets, the bond market itself is really facing some increased pressure, and many people are flocking to bonds as a safe haven due to concerns of an impending recession. Really? However, it is important to realize that the Treasury will continue to issue these bonds over the next roughly 13 months to fund the government spending, really through the upcoming election here. So there's a lot going on right now, whether it is war, whether it's inflation, or the deficit spending that is happening that's really keeping us out of a recession right now on an actual front, but is actually can be detrimental in the years to come. So there's some really significant economic landscape changes that have been happening, and yes, this is challenging. But our commitment to you is that we're going to be monitoring these developments closely and adjusting your investment strategies as necessary. We've already talked about a lot, but let's refocus on your portfolio. And now that we've talked about a lot of different aspects, let's focus on the changes. Now, we've taken a lot of strategic movements and measures here, and we're continuing to uphold these in these unprecedented times. And we're focusing and emphasizing the importance of 1 to 3 month treasury bills. Now, they're really offering the stability and the liquidity, which is really essential here when it's facing a market turbulence like we're doing. And we're also maintaining faith in India stocks as well. Now, like I said before, that India is a country that is growing their economy and inflation is slowing. So it's almost the exact opposite of here in the US. And the country's growth and really diverse market really is presenting some unique opportunities. So that is another element that we're going to continue to keep looking towards, and when the time's right, actually to add more to. Now, the critical aspect of this strategy is coming back to the US dollar. And it really is serving as a safe haven during all of these just different wars and aspects that are going on with not only our economy, but the one around the world. And we're keeping a close eye on the US dollar, because if it continues to go up, that's going to put downward pressure on almost every stock and stock market around the world. However, if it starts to go down from here, then we could really start to see a shift and actually being more what we call risk on, not only here in the US, but with different markets, especially emerging markets. So there's really a lot of changes that are going on. The US dollar is going to be a piece of that. So yes, we're prepared to adapt. And market conditions really do remain favorable for some aspects, especially large company technology stocks. And this is something that we're going to be looking to add to your portfolio more and more, because this has really shown some resilience and can actually be a good place when we have a higher level of inflation and a slowing of the economy, what I call lead 3. So that's what we're looking at right now. But again, we're also looking at some other aspects too, like the cautious approaches when it comes to energy. And I did mention that energy has a potential to spike, but right now it is much more of a wait and see versus let's go full in investing into it. So this is something that with the economic shifts, we're going to be reducing our exposure and minimizing the risk a little bit more there. However, if something really starts creeping back up with the war and especially Middle East conflicts, then we could start seeing oil and energy start to turn back up, and that could lead to some significant investment opportunities. Turning our attention, let's focus on some wealth management and advanced planning. Let's shift our focus to the vital aspect of your financial well-being, and that is your health care. Now, October marks the beginning of the Medicare enrollment period, and it's a crucial time for you to assess the adjustment to your healthcare coverage. Now, during this period, you have the opportunity to make changes to your Medicare coverage, and we encourage you to take full advantage of this window to ensure that your healthcare needs are met effectively, and really that it's going to meet the needs that you have going forward. So let's discuss some opportunities that you have to consider during this Medicare enrollment period. Now, the one crucial aspect here is that the supplemental coverage that you have, often referred to as the Medigap, really this is a type of coverage that can provide additional layers of financial protection by covering costs that the original Medicare may not. Now, this is the period of time that we can make changes to that. And understanding how the supplemental coverage works is vital. So it can help you to address the expenses such as your deductibles, your co-pays, and even some of the medical services that really is not covered by the Medicare Part A. So we can help you to navigate the various plans available by matching you with a Medicare broker who would be able to help you identify any changes in your coverage and determine your needs. And then what we do is we pop that into your overall probability of success to make sure that what your needs are going forward is going to be matched by how much we need to be taken out of your portfolios at times to meet not only the demands of the premiums, but also making sure that your coverage is going to be sound for your overall wealth plan and you have the income when it's supposed to be there. Now, another crucial aspect of Medicare coverage then to consider is Part D, and it provides prescription drug coverage. And the medications can be a significant expense. Yes, we know. But the part of the Part B plan that really can help save on these costs is making sure that we have the right coverage there. And the guidance in selecting the most suitable Part D plan for your specific prescription needs is also vital. So, as you can see, there's a lot of elements here to your healthcare, and our aim is to emphasize the importance of holistic wealth management, and it's more than just investments. It's about securing your financial future and ensuring that your loved ones and you are taken care of. Now, Medicare and health insurance, more broadly, are a major part of that overall plan. Turning our attention, I want to talk about our Second Opinion service. As a reminder about our Second Opinion service, if you have any friends or family who could benefit from a second opinion on their wealth plan, please let us know. We'll start with a discovery meeting to assess their current situation and identify any gaps that exist. Now, from this meeting, one of three things are going to emerge. Either they're going to be well positioned with no changes needed. There may be a few adjustments and they can implement them themselves. But the third element is that there may be some significant gaps, and we can provide some areas to address them and ultimately help to improve their overall wealth plan. Now remember, our goal is to always enhance your financial well-being as well, and providing you with the best possible support for your wealth journey. So with that, feel free to reach out if you have any questions about your plan and how that relates to your overall probability of success. Take care.